Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition. Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend as we are going to kick off what we do each and every Monday, Wednesday, and Friday, looking at our four major markets, identifying potential breakouts and reversals from an educational perspective. Let's go ahead and dive in with the big picture. So we're diving into it today because the S&P is down about 1%. NASDAQ is down almost 1%, and we are seeing a pretty big pullback. The Russell is down a little over 2%. Now, I say a pretty big pullback. We're down about 49 points in the S&P, or about 450 points in the Dow. And 5 years ago, that would have been a humongous number. But you know, when you're sitting up at 4,400 and the S&P is is your high, that number represents about 1%. And so it's a big pullback from a point-wise standpoint, but from a overall, it's really not that large of a pullback. And this really follows on to what we saw on Friday, as the market really gave us some weakness Friday, and we are kind of continuing that weakness heading into Monday morning. Now we had a live trading room last night, and when we looked at our live trade room last night, we looked at a couple of areas up here, and neither one of those levels came back and got retested. Matter of fact, we got a little bit of a bump higher, but we were unable to really come back to any quality supply, and then sold off, really starting at the European market open. So from that level, we've been selling off, and right now is we're kind of having our biggest and reddest of all of our candlesticks from the whole night at the moment, and so we're going to be looking to be straight sellers today. If I go to our 4-hour chart, we clearly have a lower swing high and lower swing lows. So we're officially in a downward trend. Looking at this on a daily chart, I want to look at a daily and say, okay, well, what's a reasonable expectation of how far down we can go? And right here, this little base rally, prior area of resistance, old new area of support. So I could see us making it all the way down to this 42, 47 area. Wouldn't be surprising at all to make it down into that region. Now, I'm not saying that I would go long down there, because if you go long down there, then you are, you're assuming that we're going to reverse at that level. But that's just the daily level. So if I look at this on an hourly chart, if I'm looking for an entry on here on the small time frame, it'd be this level right here. This would be the level that's probably the cleanest one for that small time frame entry. So I'm going to make this a confirmation entry because it's counter trend, but it is a fairly clean zone for a level. Now, if we pop back up, where do we see a potential reversal? I think there's no reason to assume that we will pop back up any higher than this, but you could take a look at this most recent candle and see if we reverse, if we do come back to this area of supply. I wouldn't overreact. Frankly, I think this is probably a healthy pullback that the market needs, and I think that we're going to see people overreacting, but I wouldn't necessarily lose your minds and overreact on it. The NASDAQ, very similar picture, as it's continuing to come down pretty hard. If you look at this on a daily chart, the NASDAQ level that makes the most sense is probably on a daily time period, this area right here. This one right there would be the closest level, but we've already hit that once and bounced off of it. So our next one is this area right in here. And when I go down into the hourly, if I take that level and I zoom in, we've got this little region here, a little bit of a basing before a strong move up on this candlestick. So with that being said, that this one also has to be a confirmation entry, because our big picture trend is going the other way. Now, if I look at this on a 15-minute time period and wrap my lines around the area we just fell off of, let's see if we come back and retest this zone, though I don't know that we will with our downward momentum, early this morning. We certainly are going to come back through there. I'm not willing to change my big picture bullish bias by any stretch of the imagination, right? There's no reason to overreact to this market. The fact that the NASDAQ is not down as much as the S&P, the Russell being down 2% does tell us that there's a bit of weakness out there, down a little over 2%. But the Russell's the one that, even on a weekly chart, is giving us a huge topping pattern, right? This is now 4 weeks in a row of red candlesticks in the Russell. And overall, it's the weakest of our markets. I could certainly see this one pull back a fair amount, even to this 2,000 point right in here, where we have this area of demand. So just keep an eye on those markets. I think that we'll probably go down early this week. We may rally up later in the week, but let's look and see what happens, and just trade the charts that are in front of us. And right now, it's telling us that we should be looking to be short. Looking at crude oil is also giving us that same picture. And we were looking last night at this little 15-minute level. So for those of you that happen to be awake late enough into the evening to catch this little level, this was our 15-minute supply zone entry from last night's live trade room. So if you were able to catch that trade, hopefully you have you had your stop in place as you went to bed. And as you wake up this morning, I think a good place to take your stop and move it down to is right in here at about 69.99. So you lock in a full point on that move. That's actually moved pretty nicely, especially with a little amount of risk that you had on that trade. That actually worked out really, really well if you stayed up late enough to catch that move. The next level that I would look at from a supply zone standpoint would be this area right in here, 69.50, 1 by 69.68. Now, what about demand? Well, when we look at this on the demand side, using the daily chart again, I think that we're coming close to where we could see a little bit of support between 65 and 67, as that was that prior area of resistance. And then next is gold. So gold, we had basing here just before our level. So gold did give us basing before the level for a pretty good breakdown. If you were awake again for this one as well, this one's giving you a pretty decent entry. If you were not awake, then you probably didn't grab that one, because we don't really do a lot of set it and forget it in this particular style. But let's take a look above here at this little wick over wick here. It's an unbalanced wick over wick at the breakout point, but a decent reversal level there, 1810 by 1812. So those are 4 markets. Now, from a demand standpoint, where do I see this thing falling? On a daily chart, let's see if we can, hold this 1750 line. Hold the line. But I think we can make it down to that level. Hold the line. I don't know if it's going to hold the line. We'll see if we make it down to that region. And I was pretty bullish, both gold and oil there for a while, thinking we would make it up a bit higher. And neither one of them have made it up to its final levels that I think it's going to stop. I think this is just a couple day pullback in both of these markets. But when you start to see these bigger moves, and notice I went to the daily chart in all of these markets. And the reason I went to the daily chart in all of these markets is just to look for, okay, where's the big picture chart telling me that the stopping point is, because our impulsive move is now down. So every demand level on the hourly chart is probably going to get cut right through. It's really going to need to search for demand on the 4-hour or daily chart in order to find a turning point. So looking at our stock of the day, we're going to talk about the big boys, right? Let's talk about our FANG stocks in our stock of the day. Now, why am I pulling out these ones, right? Market's going down. What makes me pull out the FANG stocks? Well, fact of the matter is, we looked at a lot of these markets. We looked at a lot of these FANG stocks a couple of days ago and found points where if we do get a decent pullback, we could have an entry. And so here was our spot in Apple. Facebook was sitting actually right near an area of old resistance, could act as new support. So looking at that one there. Microsoft also has a decent area of demand down below us. Amazon sitting right above a pretty good area of demand. Google also, you'll note, sitting above a quality area of demand. And then Netflix. All of them have, although Netflix is probably a little further away, we're sitting above a gap area that Netflix could be better. Netflix is announcing earnings tomorrow, so be aware of that one. But when looking at all of these stocks, they all have quality demand areas below us. And so what I don't want somebody to do is to overreact to a market that's giving us what is frankly a fairly normal pullback, because that's what gives you opportunities to enter into great stocks, right? You get opportunities to enter long into great stocks on market pullbacks. So don't overreact. Don't feel like you're forcing a trade by getting in too early. Wait for price to come into your level. Now, what say Chuck? Well, I keep waiting for price to come into my level, and it doesn't hit my level. Great. Well, then look, once it does pull back a little bit, look for a breakout to the upside in order to still allow you to get back in. So hopefully that helps you for all for today. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Talk to you tomorrow. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.